Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. This is Bitcoin, folks. I don't trade it. I've never traded it, but one of my followers here is a big aficionado in this, and he asked me to look at it technically. This is a head and shoulders pattern over the last week. As you can see here on the 16th, that was the head. The left shoulder was there on December 4th. Then you can see the ABCD pattern completing right here on the 26th. That's the right shoulder, much lower than the left shoulder, very, very bearish, especially when you have the ABCD formation. So what I thought I would do over the weekend, and this is what I did do, I went up and I looked, oh no, this doggone thing, I give up. Maybe not. Let me try it here if I can get this up here. I've got no chance. Just a minute. BIT, I doubt it anyway. Yeah, this might be it. I don't even know. Yeah, there it is. Well, no, that's not it. That's not it either. That's a, oh boy, I'll tell you. I hate the technical part of this business, folks. Honest to God, I'm trying to use Telegram to show this, but it's such an incredibly beautiful pattern because all I did was I went down to, let's try it. Maybe it'll work just for kicks and giggles. I'll put the hourly chart up and maybe it'll show itself. Oh, yeah, it's not too bad. Anyway, this is where we were on the hourly chart. And, of course, you know, see, this is totally different. This is Bitcoin USD. That's not what I was looking at. I was looking at Bitcoin. That's like comparing apples to grapefruit, and they're not even in the same class. So let's get rid of that and go over something that we can talk to, and that is we had a really beautiful setup today in one of our favorite things to trade that we were trading on Friday on our live trading day. We said to look to be a seller of the soybean meal up in here, and it got right to the exact price here, and has now dropped well over $750 here, and just getting ready to take out the lows of last week already. So that's really a good sign on that particular trade. Remember, folks, this it's made $800 today, and the margin on it is only 22. And as you can see, it's already completed the last pattern that took 3 days to complete. It did it in 1 day. So that tells us that this is a pretty good top, and it's getting ready to go lower. That's all we're looking at as we're watching this. Now, if you were being really cautious here, what do you want to watch for? Is watch for your first 382 retracement. That comes down here another $5. Now from there to there, folks, is 1,300. You've got a gap in here, so this would be a good place to look at the possibility of covering that position, okay, and then actually going long, because it looks like it's a really bullish formation here coming off of the last 10 days or the last 3 days. This would be a beautiful pattern right at the 382. So you would make $1,500 here, and if you bought it at 305, you only have to put your stop, around $4 lower. So the worst that can happen is you still make $1,000, and if it's really good, you're going to make a lot of money. So it's not how much money you make, it's how much money you don't lose, and that's the real key, is to focus on how much you have at risk, not how much money you're going to be making. Now, we've had a couple others here that look very interesting here, and this was really an amazing one today, folks. I have to show you this pattern that we had here in the natural gas this morning, because it was a huge one. Let me get this up here. You'll be able to see it right here. Here was natural gas this morning. This is a tremendous move. This gapped up, folks. This was a huge gap right here. Okay, that was the low end of the gap. Then it made the ABCD, just missing the 382 this morning. You can see that's 7 in the morning, New York time, to 10 o'clock. We made a high up here at the 1.618 level. We came all the way down here, and now we're just bouncing around. We had 2 382 retracements in this down move. This is really rocking and rolling, folks, and the margin on this is only like $2,800, and it's moved $3,000 already. So it's a kind you want to pay attention. But there's your number up there, right at 1.618, spot on. From there to there, that was $2,000 from the low that it came down right to this area here. That was a $2,000 move. There was a couple of small 382s in here, and that's what I'm watching it, because the volatility we're having in all these things now is just absolutely superb. You just can't ask for anything better than that. I do want to share with you what I was talking about in the markets here, just to show you for a second here. This is the German DAX, stopped exactly at the 382 on Friday. Big time down move to the downside. The E-mini S&P stopped right at there. Big time move. We went all the way down to 59.20, folks. That almost completed the big ABCD. What it did, it went to the 786 to the exact number. Here's the NASDAQ. Same thing. There it is right there. And this has come all the way down here, folks. This was the low of the day in the NASDAQ right here at that 2107 level. So we're having big swings, and that's what you want to be seeing. Look at the Russell. Look at the Russell there on Friday. Same thing. Boom. Big time down move. And the last one, of course, is the cash S&P. Bang, 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 and then boom, really down really hard. So watch these, because when they pop up, here's the Dow Jones. It went a little above the 382, stopped right in here, and the low on the day was at 4,250. Of course, we've rallied back 450 to 500 points already. So we're having tremendous swings. So that's the main thing. The reason why I'm bringing that to your attention, this is the market from 1929. There's a head and shoulders pattern in the Dow Jones. Excuse me, it's the S&P 500. They didn't even chart the Dow Jones until much later. And then we'll see what it did. You can see all of these swings that we had. As I put them in here, that was a moon. I want to get the swings up so you can see them. All of these little swings. There was your 618. The rest of them were 382. That's why I'm watching them so closely right now, folks, because if that happens, it might repeat itself. And that repetition is something we can sometimes, make a couple of bucks on it. But I really firmly believe that we're probably getting ready for something really significant here in some of these markets right here. Here was the one last night. Here's where we were. You see this morning, we went right up to that 382. There's where we were on Sunday night, right there. We had the pullback right there at the 382. And the low on that move, folks, was 21,1150. That was 2111. That's 500 down points, and you can see the smaller 382s all the way through here. And it was doing the same thing in the S&P and the Dow Jones. And then when the bottom came in, down when there was one standard deviation and a perfect Gartley at the 786, and both the S&P, there's the S&P low right there at 59.18, and here is the low in the NASDAQ that came in right at 112.54. I thought it got to 111. It was 112.54 was the exact 786. It's trading 300 points higher right now as we see. Oh, here's the one I wanted to show you. I've got it right here. I was watching here in the Bitcoin. I made a copy of this. This was the right shoulder right up here, folks. Okay, then the market comes down. Remember, this is just a few days, but I wanted you to see there was 37 bars of an hourly chart. Went up 37 hours, an hour, 1.5 days, 1.5 days, and we took out these lows now. That's a bad sign for Bitcoin. Let's take a break. 877-927-6648.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, we're going to take a look here at the Treasury bonds because I really wanted to buy Treasury bonds pretty badly. This darn thing. I just don't know why it does this, but there's nothing else I can do. There's your ABCD pattern coming down right here. I thought we would get right to there, so I said we buy them if we hit below 113. The low is 113.02. You can see there was a possibility of a head and shoulders, but it hasn't formed yet because it's going to take a while to do it. There's your left shoulder. There's your head, your right shoulders in here. All we did this morning when the market took off, you can see it went up very, very quickly. And of course, if we look at this on a smaller time frame, going down to 13 minutes, what you want to do is to look for your first 382 retracement, and that might help you to get long the position. And as you can see in the Treasury bonds, it in fact did do that, and then it rallied almost $1,000. It had another pullback right here, so we need to redo this because we've got a new low or a new high back in here, so we move that up in here. So watch this level here for some good support either today or tomorrow. 113.25. That's only 6 pips away, so that's nothing in that market. So let's keep that in mind because this is a oversold market. We're looking for a bounce. The New York, the Treasury notes and the Treasury bonds are 2 of the most bearish charts that you can find. The only one that's more bearish is that New York Stock Exchange Index chart. That's the one that's the must. Let me show you the pork bellies of the commodity business, folks. This is the the natural gas that I was following today. There's the ABCD right up to this level. There was your first 382. It went against you about $3. You sold it at 08. You had to stop to be up here, and then you can see you made a perfect ABCD to the downside. We'll just walk through this because this is really a beautiful picture chart for someone who wants to trade something that's really volatile and don't have to risk very much. And as you can see, after we broke down from that level, it went sideways for 2 hours. So all you have to do is you want to take this is just pick up the last little thing that you had. There was your high that you had right back in here. There was your first 382 pattern right there. There was your second 382 pattern right there, and you had an ABCD, and then bang, look at that. Folks, that's $700 without hardly any risk at all. And that's telling you that this natural gas is in play because it's going to be really jumping around. And that next low, you want to watch it down here at this 1.618 here at 3687. That would mean it's going to make a new low on the day. No, it won't. The new oval today was way over here, so we'll have to watch that. When you watch this number here at 368, right now we're at 385, so that'll be an interesting one to see. But it follows the patterns very nicely. You can see the smaller A, B, C, D patterns right in here. Using a $4 or $5 stop on this, and the moves are huge. I mean, this from 4,200 to where we are right now, folks. That's $2,600 $1,600 without hardly any. Oh, let's try that again. Like $2,600 without hardly any risk, and the fact that the margin on it's only 29. So that's a really good deal. Now let's switch over to the currencies, because we've had some action here in the euro and the pound. We'll look at those here. They were moving pretty good early this morning. Then the old I sent this out in the video earlier this morning. There was your 382 off that previous move right there at 105.60. Went above it by 10 points, and bang, down hard it came to the tune of about $800 without very much risk at all. That was a really interesting one here in the euro. Now, if we take a look at the British pound, we'll see pretty much the same thing. Only it's even clearer because it made a perfect 382 one more time. As you can see, it made it here, and it went from 126 all the way down to 125, about $600. Now it's backing up a little bit, but very little risk at that point. And of course, if you want to trade the currency, this is the easier one to trade as far as risk, because each pip is only $6 as opposed to $10 or $10 in the euro. So that's why you want to keep an eye on both of these, because there's the 382. It's still bearish. It's had a 10-day rally from the 20th of December, right back up to the 382, telling you that's it. Because remember, on this chart here, it's 125.50, and folks, this has got 123 written all over it. There's your 123 right there. That's the 382 on the whole thing, and if you move it over like this, you'll see it. There's what you're looking at. We went short up in here, had a nice run, and now we're watching to see, do we get down to this level here one more time, which I think we will. And especially with today's action, just being 382 of that previous move, that gives you some really good risk-reward opportunities as you're watching these things here unfold here today. Now, we have another one that we've been on, rather on the bullish side of for quite some time, and that has been the crude oil. I want to bring this up to you, get this out of the way so we can get up here and see the crude oil. All I have to do is get this out of the way here and bring it up right now, because it's still on the upswing right here. And here's where we are with the crude. And as you can see here, folks, you just I'm sorry for laughing, folks, but when I see these things each day, I say, why in the world? Some people just cannot see this. It just amazes me. But there's the crude oil. You can see the ABCD's up. There was your number right there, 71.47. The high today was 71.56. It's now only $300 under that. But look at your beautiful buy point that you had in here. You had it stayed at the 382 here for several hours. This is an hourly chart. So if you just looked at that on a 382 format, just from your last low back here on the 26th, okay, where'd it come to? Exactly. Stayed there for 2 hours. And then it rallied $1,000, almost to the exact 1.618. It came within a heartbeat of where you're supposed to be. And what number was that, boys and girls? Somebody draw it out of the hat just for kicks and giggles. And there it is right there at 71.42. And now this is where it is right now. I mean, this market's trying to make a major bottom, folks. It really is. So we've got to be able to look at that. In another 4 minutes, folks, you're going to be pleasantly surprised, because we have the main man, the big daddy rabbit, Mr. Stan Harley of the Harley Stock Market Letter, who said there was going to be a top around that December 6th area, and by golly, I think it was the 7th. But we have Stan coming up and talk to us maybe about, where the market's going to have a bounce from, what are you looking at longer term. But anybody that was that good, you got to listen to him, because he'll be on with us in just about 4 minutes from where we are right now. Of course, we have to take a look at Apple. And it was down for a little while, I imagine, until someone realized that, gee, it's on sale today. And there's Apple right here. See what it's doing today. And, it's still down. It hasn't really bounced very much. Well, there was the high the other day, and today's bounce is just, really just $53. It's really not very much. So we'll see what happens. Folks, this market action is not very good for the stock market. I try to bring that out to you in my letter and stuff, but I haven't seen any this bearish in a long time. Of course, I've been bearish since 1978. No, that's not quite true. Anyway, and Stan Harley will be with us at the break here, and he'll clarify everything and correct everything I just said. That's for sure. We got 36 seconds here to take a look here at Tesla. And I'm sure it's still going up. Let's just double check to see where we are. It's actually down today. That's hard to believe. No, actually, yeah, it is down just a little bit. All right, we'll have Stan Harley coming up, boys and girls. Stay tuned. Stan Harley is in the house.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Okay, folks, Stan has some technical difficulties right now getting on, but he's in the sidelines coming in. Let's take a look at the complex of crude oil. We looked at the crude oil. Now we're going to look at the gasoline, which is also one of our favorites to take a quick look at. And there it is right there. We'll get the hourly chart up on that. And as you can see, this also has been quite bullish. And it's still going higher. You can see we're completing the ABCD patterns up in here. And you can see all the nice, beautiful Gartley pattern that you had right here that came right in just about spot on at the 50% level. Perfect. And then boom, away we're going. You can see there's your 382 when you make a new low. And all you're doing is you come up and you go right down to your really strong support right there, and then away you go. And we got more to go up to the upside here. This thing looks like it's heading up to that 1.618 level there at $2 a gallon. And I'll tell you, has been a long time since I paid as cheap as gas as I've had here in Tucson this past weekend. There we are at $2 a gallon. We're $1.99, so we're 201 there. We're getting really close, so that would be an interesting one to take a look at. You can see the beautiful pattern that you had right here on the downside, the ABCD, really good moves. Now, we need to verify that by also looking at the heating oil. And as we come up to the heating oil, which is HO, if you can just stop 1 second and pull that up, and there's your hourly. This has been a very strong one because it has a strong seasonal bias. And when it's cold, it has a tendency to be stronger than anything else. And that's what's happened here over the last few days. You can see here was the bottom down here on the 27th. Beautiful symmetrical bottom, just about as perfect as you could possibly get. You can see just within a couple hours of being the exact low. But here's the key. Remember, when you have this big move up, this really scary move up like this, the first thing you want to do, remember, this is an hourly chart. So looking at it real closely, that's what you're doing here with these microscopes, is you want to take it from your low right back here, and you can see the ABCD pattern very clearly there. And where does it come in at? Open the front door and save some rent, because there it is at 38.2% right on the money. And now we've completed the ABCD here to the upside. Now we had a little bit of a pullback here, but even that was just a very, very minor one, just coming again right down to the 382 again and then up. So this is completing. The question is, will it be today or tomorrow? But we want to be watching heat oil for a possible short coming in after the holiday. I'm not going to be here tomorrow, folks. I always take New Year's Eve off. I've got to do some things for my neighbors here in town, or in Tucson, but I will be back on Thursday and Friday. All right, now let's move on and take a look at one other thing. And the one that's got my interest, folks, is natural gas, because it's jumping around so much, and it's just like pork bellies used to be. It's just about everything you could ask for. There's the big move down. You can see here's where we've been in this is a 2-minute chart. But just watch how it's swinging around. There's your high right here. If you go and take a look at the last time it jumped that much, pull it right down. Where did it go to? Right at the 382. Folks, that's $700. That's like 2 pennies in pork bellies. That's how wild this puppy is. So pay attention. It's a great one to trade. Look at the ABCDs on this darn thing. Just absolute A, B, C, D, boom. Can't make it up. It looks pretty good from my perspective. All right, let's take a look now at, we've got somebody in the house. Let's double check and see where we got. Stan is in the house. Mr. Harley, how are you, my friend?
Awesome, Larry. For some reason, we had some problems. I think it was on my end. Don't really understand it.
Everybody in the den has a question. How is that scale down buying program that you started on December 16th working out for you?
Well,
that was one of the best calls of the year, Stan. My hat's off to you, my friend.
Well, thank you. I had to switch computers. For some reason, my camera and microphone weren't syncing on the other one. I don't know what happened. But anyway, we're on the laptop, and let's jump into the charts.
Okay.
It's my belief that we've got a significant high in the stock market in the making. I'm going to go over yearly, monthly, weekly, and daily charts to encapsulate my working premise.
Okay.
First of all, this is the yearly chart going back to 1602. And what this is, it is a synthesized S&P 500 utilizing the Dutch data, the British data, and the American data synthesized by the Foundation for the Study of Cycles. And I have inputted this data into the Cycles Analyzer program that the Foundation has produced. And it does a terrific job of analyzing a data series and determining what the dominant cycles are in that data series and ranking them through an AI routine that it has.
Stan, we have a question that they're not getting the charts are not popping up. Could you double check that we got that set up right? Because they would like to see your charts very much. If you could check what maybe,
Wow.
I'm the last person in the world I ask that stuff to, but see if you can reevaluate how to get those charts back into the den here so the folks can see them.
Boy,
And if you can't, you'll just have to tell us what you're looking at, buddy. And that's fine with me because the numbers what really means something to me. So
wow.
I do have a question. I have a question from several of them. What's the next big turning date in the stock market? Do you see something coming up in January?
I do think we've probably seen the high that I was anticipating. When you had me on December 4th, I talked about all the work that I was focusing on under my microscope. And I thought December 4th, I said with you on the air, I said, Larry, I think today is the top. That was the top in the Dow Industrial that day. And the S&P topped 2 days later.
Yes.
And we've been down since. And I think we're going to be down for about 4.5 years. I'm not
Say again, please.
I think, well, in all seriousness aside, the top in 1929 that occurred on September the 3rd and the low that occurred on July the 8th, 1932 spanned 34 months exactly from high to low. As you know, I know, a lot of us know that's a Fibonacci number. And I've done the analysis, and it looks to me like the present market is going to be down 55 months. So that's going to take us down into the summer of 1929. Not straight down, of course. It's going to stair-step its way lower. But I think we're looking at a protracted bear market decline between now and mid-2029.
Yeah, okay.
There'll be some important lower shelves along the way. Right now on the daily charts, I'm looking at the latter part of January, right after the inauguration. Or perhaps.
Okay, let's take a break. Stan, stay with us. We've got to pay a few bills. We'll be right back. Stan Harley, Harley Stock Market Letter. Can't miss it, folks. Good info.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, with Stan Harley, the Harley Stock Market Letter. Please continue, Stan. You're coming loud and clear now, so we got everything up and running. So please fire away.
All right, Larry, good to know. Working on the laptop, the audio visual is not as good as on my other computer, but we've got some information to share nonetheless, which I think will come through clearly. The yearly chart here shows the tops in 1649, 1720, 1835, 1929. They're all separated by a cycle that the cycles program determines to be 92 years. And the next top is due right about now as we speak. If we drill this down to the monthly data, I've uploaded the monthly data, the Dow Jones Industrials, into the same program that's produced by the Foundation for the Study of Cycles, and it extracts all the cycles from that data series and rank orders them, and it determines that the number one cycle, which I put a red box around, is the cycle that nominally spans 41 months. Here it is right here where I placed the red box around it. And the plot is on the screen, and as you can see, it shows us topping right now. This 41-month cycle has been around for a long time. Edward R. Dewey, back in the 1940s, initially discovered this in his own analysis. It was the dominant cycle in the stock market back then. It's the dominant cycle today in 2024, and it shows us peaking right now. Here's a chart that I've shared with you in the past. I updated it this morning. What I've also found is there is a cycle that spans 150 months in the data series. Curiously, the cycles program doesn't pick this up, but my eyes do. What I've done is I've gone back to the low in December of 1974, exactly 50 years ago, and I found all of the major peaks have been separated by this 150-month cycle and or Fibonacci perturbations thereof. So springing forth from the December 9th, 1974 low, 150 months, aligned with the August 1987 high, another 150 months, aligned with the early 2000 high, and then we've got Fibonacci perturbations of 2.618, 3.236, 3.618, 3.764, all dominant Fibonacci ratios. They aligned pristinely with every single high of import. And the next one, assuming the pattern doesn't expand or contract, would be 4.00, and that is due right now. And what I've done is I've taken all those data points, put them into a spreadsheet, done a regression analysis of the data series, and found that there's a cycle that spans 150 months. And as you can see, all of those major highs align pristinely with this cycle, and it projects the next recurrence for December 2024, which is now, And this is really something astounding. Over a period of 50 years, 50 years, Larry, the standard deviation is less than 1 month. That is just eye-popping astounding.
Well, it really
less
is.
than 1 month.
Wow.
And we've talked about that for some time now. It's eye-popping to be sure. Let's drill this down, look at the weekly data, something we've talked about in the past. I'm a big fan, as you know, of Lucas numbers. And I found all of the major tops over the last many, many years, as I've shown on this chart, going back 40 some odd years, all of them have been separated on the weekly chart by the Lucas number series multiplied by 2. So over here in the corner, I put a little box. Here are the Lucas numbers, 47 through 322. I then double them. That's in this column. And note, every single high, plus or minus maybe 2 to 4 weeks, is lined up with the Lucas multiple times 2. And lo and behold, between the January 2022 high and the most recent high in the S&P, that was exactly Lucas 76 times 2, or 152 weeks.
Wow. Compelling case, my friend.
Indeed. Very, very compelling. When I go back to the 2020 low and look at the various Fibonacci ratios springing forth from that date, they align with some significant turning points. The 1.00 function of that aligned with the first week in December.
Wow.
And when I look at the daily data, this is the same chart that I showed on the air on December 4th when I was on the air with you. I thought at that time, showing these same charts, I said, Larry, I'm going to go out on a limb here. I think today might be the top. And indeed, the Dow Jones Industrials did peak on that day. The S&P 500 topped 2 days later on the 6th.
Wow.
And
pretty accurate, my friend. Pretty accurate.
And that's the chart of the Dow now, is about an hour ago.
Mm-hmm. Wow.
I
have a question from one of our listeners. On the indices that you look at, do you weight the Dow Jones? You don't keep the Dow Jones as strong as weight as the S&P 500 because it's a totally different index. Am I correct on that?
Yes, but I get the gist of the question. What I do, an excellent question. What I do is I look at what I call the Big Five. For me, the Big Five, the components that comprise the Big Five are the Dow Jones Industrials, the S&P 500, the NASDAQ Composite, the Dow Jones Transports, and the New York Composite. And I want to look at the interplay among those five. And what happened was between November 25th and December 16th, I believe it was, each of those five indices among the Big Five saw their all-time highs. And that's how tops are, and then the last one to peak was the NASDAQ. And that's how tops are made. You don't typically get them all topping on a dime. You see early on in the topping phase, all of them go to new highs, and then over the next several weeks, sometimes months, one or more start falling off the new high list. That's exactly what happened. I weight them equally in that regard. The important point is I want to see the interplay among the Big Five, and then as we reach the final top, meaning the last index among those Big Five grouping, to see its final peak. And that's exactly what has occurred here.
Well, that's pretty good, my friend. I tell you, when you showed it to us the first time, I said, boy, that looks really compelling. And then the next day, the thing topped, and everybody was talking about it, Stan. So you did a superb job on that. And a lot of people were ready to buy, and they've waited. And, boy, that's been a very smart thing to do. And if they went short, they made a couple of bucks. So that's really what you're trying to do here. But the work is just spectacular. And you put it in a presentation that's really hard to dispute scientifically. I mean, you can actually see it. I mean, when you can see these things, the thing that you mentioned there about less than one standard deviation out of 50 weeks, I mean, that's incredible. I mean, that's about as perfection. Yeah, that's an incredible number. I mean, that's just, you got to pay attention to that. At least I would think one should. Who knows?
I heard a financial analyst on our competing network this morning say, nobody can time the market.
Yeah. Amen. Hey, thanks for joining us. Happy New Year to you and your bride, and I hope to see you in 2025, my friend. Try to get out here. It's much better than Virginia. Thanks, Stan, for being with us, buddy. We love it. We'll be right back, folks. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're going to take a look at the Treasury notes. As you notice here, this was a 11-month rally in a very, very bearish market that started 3-some years ago, if you remember, when they were telling us about negative interest rates. And there was your ABCD pattern. We had the break. We had the rally right up in here. We said get short, and you can see that number came in just a tiny bit above the 382. You can see it's like 0.406. Now we've broken down. We're having a little bit of a rally here, but this is where they're going, folks. Interest rates are going to be higher. They're not going to be lower. That means inflation is probably going to be coming back. That's why you want to keep an eye on some of these grains. And since we're talking about grains with just a few minutes to go, one of my favorites to look at for the new year is the wheat market. And as you can see here, we've been friendly to wheat for quite some time. You'll be able to see there was our ABCD pattern here in the wheat about a week ago. We had a really strong rally today. and you'll see we backed off. And of course, we look at this on the hourly chart, it's probably going to jump out at a beautiful ABCD, and there it is right there, folks. I had it done in earlier, but there was a perfect ABCD up there at 55. We're now trading at 47. That's only $400, but that's still where you want to be taking your profits on wheat, and you want to get ready to be buying them if we get a nice ABCD pullback, folks. Wheat and is something that cookies and bread, people are not going to stop eating that. I don't care what price it is. And of course, this was $13. If you look at the long-term monthly on this, you can see way back here, it was trading at $13. Now it's down here at $5 and nobody wants it. What's wrong with this program? No, you got to be buy them when they're crying and sell them when they're yelling. Sell them when they're yelling, buy them when they're crying. That's the secret to what we try to do here at TFNN. Folks, this is it for me for the rest of the year. May God bless. It's been a wonderful year. It's going to be a great 2025. I want to wish everybody a happy new year and stay safe and live every day like it was your last, because you don't know when that day is. So we'll see you on next year on Thursday. May God bless.
Steve Rhodes